What's up, guys? It's Nova Force with SupernovaAlerts.com. Today I'm bringing you a video lesson on plug. Now this trade is a trade that I missed, but this setup actually took place yesterday, September 21st. And like I said, unfortunately I missed it because this was a perfect setup on my pattern. It actually set up twice. Now let's just get straight to it. Right here you'll see, let me zoom in on this a little bit more. Right here you'll see this is the opening candle of yesterday. It's just a small 4-cent candle, and it's a positive candle, green candle, white candle in my case. And you see on the second minute it came down a little bit, created a little doji. I don't pay attention to those too much, like these up here, those down there, but they're good indicators. But here is what I really look at. The first candle, the high of the first candle is 204. The low is $2. This will sometimes break down below the low of it, but what you really want to look for is this candle right here. It breaks up through the high of this candle, excuse me, or the high of, a couple candles later, which I'll show you here in just a sec. So really what happened, you have a lot, you have some volatility going up and down upon open. And then you'll have a little, it settles a little bit, even though this is just a 3-minute pattern right here. It just settled just a little bit. People, took a breath, wanted to see what this will do. And as you can see, it didn't move much, just a couple cents. And then once it came to the third minute, you got a little volume spike, and it broke right through the morning resistance, or the first candle resistance, and which led to a good little 6-cent rise, which that's not anything to brag about yet, but as you can see, the same thing happened right here at 210. It came up, consolidated up around 210. It wouldn't break out over it, but that was clear resistance point within these 2 to 4 minutes. It came down, a small dip. It did not break down to 13 EMA, which, guys, this is one of the main things I base my exits on, is the 13 EMA. As long as it's bullish above the 13 EMA, I will generally stay in, unless I already have a good profit able to lock in. Then that's a whole other story. I'll be going over that in a day trade package that I am currently working on. I don't have a deadline set for that yet, but I will definitely keep y'all posted on that, so along the way, you're not wondering, oh, is he done yet, is he done yet? I'll keep y'all posted, hopefully by the end of the year, by the end of this year. It's only a couple months away, but I'll do my best to get that done as soon as I can. But back to the trade. It came up here and consolidated around 210, had a nice little dip, stayed above 13 EMA, and then boom, volume spike, as you can see right here, right above 210. Now you can see it kind of dipped back down, but it actually consolidated in between 213 and 210. See, popped up to 213, same exact thing happened as what happened right here. So hopefully, if I was watching this, I would have entered right there. If I missed that trade, I would have definitely been watching it as this dip was happening. And then, so for example, let's just say we entered at 211, because I generally put it a cent above, because it could just bounce right off 210 again and keep on going, which is another reason why I don't buy the dip, because as far as I know, this thing could just keep on rolling down, or even drop off just all the way down, under 2 for a quick 10% loss, and that's not really what that's not really what I want to do. So the risk reward just isn't there for me on buying the dip on most trades, especially trades like this in the volatile morning hours. So I wait for it to break out over a sure resistance, or a slight resistance, really. And sure enough, that's what it did at 204 and 210. Above 210, it just continued to rise without even breaking down 13 EMA all the way. Look, it rose all the way for the high of the day at $2.33, and then say I was, using the 13 EMA indefinitely for my exit. If I entered at 210, I would have come out somewhere around 220, 221. Right around here. That's still a solid 10-cent gain. But knowing myself, I would have locked in profits when I could, even if this, for all I knew, this could have kept on rolling all the way to $3. But I would have looked for another pattern like this. Just like, say, this came down and it busted back over 233, that would be a possible another entry point. It's more risky there because it's later in the day. It's the high of the day, as opposed to this break, even this break, But I would have gotten out with a solid 20-cent gain at 230, which would have been a very good trade because that's just 3 cents away from the high of the day. But as you can see, the rest of the day just kind of consolidated around 220, 225, around there. But that's basically one of my few day trading strategies, is get that volume spike above the resistance line that shows within the first 1 minute or the first 5-minute candles. Sometimes, say this one was a white candle, it just rises up and it bounces off that and then just comes down and it'll shoot right up through it just like this did. And that's really what I look for in trades like this. And if gauging the exit, take profit when you can or ride the 13 EMA. But sometimes, breakout be a false breakout, which I'll go over in another video here soon, as long as, I don't like to see them happen, but I'm sure I'll find one here in the next, within the next week, and I'll do a video on that. But if it's a false breakout, it breaks down below 210, especially if it breaks out through the low of the day. Say, you enter at 211, I'd probably put my stop around, especially, at the most lenient 2, because that's the low of the day. But around here, I would have probably put it around the this initial breakout at 204. So that's one of my patterns. That's how I gauge certain entries and certain exits using the 13 EMA. Alright guys, have a good one. Happy trading. Peace.